This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode is also brought to you by Mercaris. Mercaris produces the most comprehensive, trusted market analysis for organic and non-GMO agriculture. Do you have farm gate prices? If so, Mercaris invites you to join our farmer network, contribute your prices, and get access to the best information to run your farming operations. Get started by visiting us at mercaris.com/farm_gate_survey. And thank you to Mercaris.
Hi, it's Rob Wallbridge from SureSource Commodities in Petrolia, Ontario, Canada. I guess we'll start with a brief harvest update. The last time we talked, soybeans were coming along well, and those are pretty much wrapped up now. And farmers are fighting to get the last of the corn harvested done. Field conditions have remained wet, and so farmers are having to pick and choose which fields to go into to get the corn off. And there's likely going to be some acres left out till freeze up when the ground can carry the combines without doing too much damage to the soil. On the other hand, yields are really impressive. Farmers are really happy with what they're seeing for corn yields in this area. 150 bushels to the acre is considered a decent yield, and I've been talking with growers that are getting, fields that are pushing over 200. Other farms are averaging 180 bushels an acre. So corn yields have been excellent. Soybean yields were very good, probably above average as well. So and of course, prices have remained very strong for soybeans and level for corn. So all in all, it's been a pretty good crop here. I guess the only downside with the wet weather again has been fall cereal planting. There's definitely a lot fewer acres of winter wheat and rye and spelt in the ground than farmers had originally intended. And the wheat that got planted and is up and growing, a lot of it is looking pretty rough. So that will probably affect the amount of wheat that is available on the market come next harvest season.
Now, I assume that not only will, if this trend continues, that not only will quantity of wheat harvested next year be impacted, but is it the wet weather that is causing the crop that did get planted to look poor, and will that affect quality during harvest next year?
It's definitely going to have an impact on yield, and it is. It's just it's the ground is so wet that wheat is really struggling to get a good start. Although farmers I've talked to, they're going out, they're checking the crop. It seems to be well rooted, but it's just it's struggling for oxygen in that saturated soil. So it's really going to depend on what type of winter we get, how the crop comes through, and what the yield will look like. wheat quality is determined more by conditions during the growing season and at harvest time next year. So we'll kind of have to wait and see what quality looks like. But I think indications that there definitely will be a yield impact. So, like I mentioned last time, there was concern about fertilizer supplies and availability to come next spring, and that's kind of continued through. Right now, it's relatively easy to secure supply of things like compost and hen manure pellets, and get that locked in. Supply is definitely going to be tight come next spring. So my advice to growers would be to, get in touch with your suppliers and make sure that you've confirmed availability. And then, for the mined minerals and micronutrients and that type of thing, it's really hard to confirm pricing for next spring. So we're kind of locked in a wait and see, because of freight and everything else, what prices for those things are going to look like next season.
Now, I know last month we talked that part of the reason behind this is just a spillover from the conventional fertilizer supply being tight or hard to come by or high priced, and some of those farmers looking at organic alternatives or alternatives in general, and organic being one of them, causing a supply tightening. But is there also just supply chain and trucking impacts that are causing this kind of up in the air, wait and see, limited availability that we're looking at moving into next year?
Yeah, I think that's definitely, the logistics are definitely the case for, like I said, like the micronutrients. A lot of that comes in from overseas, and then for things like potassium sulfate or langaminate, you're dealing with rail or transport across the continent, and so with the level of uncertainty around availability of freight and freight costs, it seems to be, again, everybody's just kind of waiting to see, and my suppliers haven't been willing to commit to pricing at this point because we really don't know where those freight costs are going to go.
And I do know that, like you said, there will be some things that we just won't have any idea on until we get closer to next growing season. But there certainly are a few items that might be able to get locked in at this point. And just want to reiterate for farmers out there, like you said, Rob, that it's just all the more important this year to get in touch with whoever you work with to see if you can lock in seed or whatever it is they're able to get their hands on that farmers would use. That now is the time to do that. Otherwise, who knows what's going to come next year. I don't want to live in the world of fear, but certainly right now some of these uncertainties might make things very difficult next spring.
Yeah, well, I think too, the point too is even if you can't lock in, an order, at least being able to, if your, dealers and suppliers have an indication of what you'll be looking for, what kind of volumes you'll be looking for, it makes planning that much easier, and it means that things can get booked in advance and be sure to be on hand in time. Nobody likes trying to scramble to pull things together at the last minute, and again, with the kind of hiccups we've been seeing on the logistics side, the earlier that everybody can plan, the easier the more smoothly things are going to flow come next spring. And yeah, you brought up seed, and that's another big issue as well with the drought in the West. That's really impacted forage seed supplies, and so we were already anticipating, shortages and limited availability. And so that's something else that farmers should definitely be looking at, talking with their suppliers about.
It sounds like we had a good crop year this year, and now we're starting to talk about next year already. And glad to hear this year went well. And certainly we'll be keeping an eye on, the fertilizer and seed situation and giving updates on this podcast. But in the meantime, Rob, really appreciate the time and the information, and we'll talk to you next month.
All right. Thank you.
Hello, everyone. This is Ryan Koory, the Vice President of Economics here at McCar's, with your November monthly U.S. Organic Market Outlook update. Taking kind of the broad perspective of the U.S. organic industry as we move through harvest. Right now, it's kind of steady as she goes. Import trends really haven't changed over the past couple of months from what we were talking about ahead of harvest. And if we look at harvest itself, we continue to see the same things that we talked about in October and September. Pace of harvest overall seems to be moving pretty quickly without any real substantial delays. And if we're looking at corn and soybeans, in both cases, we're looking at pretty strong yields. So overall, harvest continues to look like it's going to be pretty positive this year. Looking back at the month of October, we did get two pieces of information which could prove to be somewhat impactful for the U.S. organic trade picture, particularly that element of U.S. organic soy imports that we continue to discuss. The first announcement we received was delivered in the middle of October. The Department of Commerce returned with its decision memorandum regarding the anti-dumping duty portion of the tariff situation for U.S. or organic soybean meal imports out of India. If you remember, this tariff situation really was composed of two pieces. And so the first piece of this, the countervailing duty section, was determined back at the end of August. And in that section, that was based on whether there were subsidies within India that were allowing the production of soybean meal at market prices that were below U.S. fair market values. And in that CVD, that countervailing duty part that they decided back in August, what they came back was they split the CVD into two pieces. The first piece was on the adverse facts available, essentially the players who refused to provide information, and they were assessed a rate of 266.37%. The remainder of operations within India were assessed a much lower CVD rate of 7.05%. And so after that portion that we received at the end of August, that CVD, what we've been waiting on is the second piece that we received in October, the ADD. Now, the ADD is a little bit different, the anti-dumping duty, because it's assessed based on the price of the commodity as it's being sold in foreign markets, not necessarily the structure of subsidies that exist within India. And in this ADD portion, the Department of Commerce did decide that there is organic soybean meal being sold in the U.S. at less than fair market value. Now, with that being decided, they did assess an anti-dumping duty tariff rate, and they did, again, split it along the same lines of the countervailing duty, along the adverse facts available and the non-adverse facts. For the operations that were assessed the adverse facts available rate, they were assessed a rate of 18.85% for the ADD. For the remainder of operations within India, they assessed a rate of 3.11%. So if you recall our conversations we had in the past, there was discussion of this anti-dumping duty rate coming in as high as 156%. So even at the 18.85, we're still well below what we were potentially looking at before. Add to this, there is a deduction applied to this anti-dumping duty rate to compensate for the portion of it that was already being offset by the countervailing duty, essentially the portion that could be attributed to subsidies. And that offset is 7.02%. So what that means is, with the anti-dumping duty rate and the offset of 7.2 or 0.2%, for the entities in India who are facing the adverse facts available tariff rates, the ADD rate will be 11.83%, which when you add that to the 266% we were already talking about, doesn't really change the picture from what we were discussing back in September when we got the CVD portion of this. For those who are not in the AFA group, whenever you take that 3.11% and you subtract that 7.02, essentially they're looking at an anti-dumping duty rate of 0. So that means their ultimate tariff rate is essentially just going to be the countervailing duty rate of 7.05%. So, this is news, as in it covers a gap in information that we were waiting on, but it's kind of no news at all because it really doesn't change what we knew and what we were discussing back in September. So it really looks like the anti-dumping duty rate isn't going to change much from what we had already established with the countervailing duty rate. The second piece of information that we got out of October actually comes from India itself. On October 20th, India's Agricultural Processed Food Products and Export Development Authority, APIDA, they issued a decision essentially barring 4 organic certifying agencies from registering any new processors or exporters of organic products. And they issued a 1-year-long suspension for one cert, essentially prohibiting one cert from certifying any kind of organic operations or really participating in the organic sphere at all for the next year. And this decision was made following an announcement by the European Union. Essentially, the European Union issued a blacklist for these 5 organizations on the grounds of failing to meet regulatory standards within the EU. And so the reason that this might really come in and impact the U.S. is, number one, for these agencies, it's going to make it very difficult for them to be able to, or actually impossible, to send organic products to the U.S. in the near term. But if we also think about this in the context of the fact that right now India is going through a process of recertification following the USDA's announcement back in January of this year, where all Indian agencies essentially had recertified through an NOP accredited certifier essentially by July 12th of 2022. Well, anyone who is pursuing this recertification through one of these agencies, it's not exactly clear right now what impact it will have, but it appears that it will essentially restart that process back to 0 and make them go through this process again through another certifier that's not on this list.
Well, the news just keeps on coming out of India, doesn't it? I think you went over the decisions by the Department of Commerce and where that stands, and certainly it is good to get a little bit of clarity. I think some of the uncertainty, or I should say some of the market situation, has been due to the uncertainty of what is going to happen with these tariffs. So we get a little bit of clarification there, but now we throw in do some of the people that might want to get certified that we're going through the process, throw that up in the air now. All in all, Ryan, where does that leave us in this market that we, the soybean meal market in particular? At first I'm thinking some of that uncertainty might be gone away and some of these tariffs are lower than we anticipated for at least the ones that shared information. So, does that open up a dump on the market for soybean meal? But now you throw in this certification issue, we throw in more uncertainty. So I guess the question for you is, where does that leave us?
Yeah, thinking about that first piece of news around the actual tariff rate, it really was a non-issue, right? And with it, we don't have a final decision yet on this. Essentially, the way this thing works is the Department of Commerce does the investigation and comes up with its findings, and it passes this information to the International Trade Commission. And from there, the ITC will essentially review the information, take additional input, and they will issue a final decision sometime probably by the end of March 2022. Right now, it's what we're seeing right now between the finding of the anti-dumping duty and the countervailing duties will probably be very close to what we see. For those who are assessed this lower rate, the non-adverse facts available, the 7.05, it's not likely that that rate is going to be so high that it'll prohibit operating within the U.S. market, particularly given current prices. It's not likely to really shut down the market. And to that extent, the fact that the ADD came in so low, it does change things a bit because now we know that they're likely to continue to be factors in the U.S. but the vast majority of Indian suppliers are actually within the adverse facts available group. And even though they didn't get a much higher rate from the anti-dumping duty, they're still facing a 266% tariff out of countervailing duties. And that is likely to prohibit them from really operating in U.S. markets. So, we're not likely to see a large dump. You might see an uptick in imports from the adverse facts available group, because one of the stipulations of this whole process with these tariffs is essentially beginning in late August, really early September. If you imported anything from India, you had to essentially be prepared to pay any kind of back tariffs that might be assessed. And so a fear of 156% tariff may have prohibited some imports over that time period, but you're really talking a pretty small time period, September, October. And you're only talking a few operators. We might see an uptick, but nothing that I would classify as a dump of imports, really. And potentially, sure, if the ITC gets a hold of this and decides just to throw it all in the waste bin, and we wind up with tariff rates that are much, much lower, yeah, by the time we get into April or March of this year, we might start to see imports come in at a much higher rate, because the looming prospect of these tariffs has gone away. That's really unlikely to happen. So, yeah, we might get a slight uptick now that this is out, but it's not likely to be a substantial factor in terms of changing what we're talking about for Indian soybean meal imports. And then, yeah, you stack on top of it this additional information we got in October from India itself, in which now you have all these operators who've lost their ability to export to the U.S. That doesn't make it any easier, right? And so none of this really gives you a rosier picture in terms of the ability to source soy products from India and organic imports in general from India, particularly given the PETA decision that was released. So yeah, it's more, I'd say, more bad news than good news, even though the ADD issue really didn't supply anything that would make us be more pessimistic. The PETA issue certainly did, and things just continue to look rockier for that trade relationship going forward.
And just one more quick question on the decision by PETA to, essentially blacklist these certifiers. I think you might have touched on it with the European Union decision, but is that where this decision, is PETA trying to be proactive in the U.S. market by, banning these certifiers from being used by Indian producers, or where is this stemming from, this decision by them?
Yeah, it's hard to say specifically what their motivation is, but really, if you follow the chain of custody on this issue, so to speak, it came out of the EU. The EU identified these 5 specific companies, and based on a host of issues, one of the largest issues that I was able to find that they really outlined was essentially contamination, either in terms of fumigations or pesticides or whatnot within imports that they were receiving within the EU, and it was a persistent issue. And based on these continuous issues, the EU blacklisted these folks. Following the EU blacklisting these 5 organizations, essentially blocking them from operating within the EU, it very well may be that India, because they're having so much scrutiny put upon their organic certification and their organic products, and India has developed a pretty robust export portfolio when it comes to their organic sector. So it could be they're proactively trying to protect what's left and trying to rebuild. It's easy to kind of see this as maybe being punitive on the side of India, especially as these people are trying to recertify for the U.S. market, while the U.S. market has taken a few actions that can definitely be seen as negative towards India. But it really seems like this is in response because it is specifically these 5 companies listed by the European Union. It looks like it could just be India trying to get ahead of a situation and trying to maintain control and integrity within their own domestic organic programs.
Certainly makes sense. And on trying to look on the positive side, in the end, hopefully this increases integrity of organics overall. But certainly in the meantime, the market is dealing with the impacts of all these different decisions. And just wanted to ask you, in the short term, what are we seeing with prices? Where are they at currently? And do you have any outlook for, the next short period here of where they're headed?
Yeah, looking at kind of where we're seeing organic prices right now at this almost the end point of harvest at this point, we are starting to see a little bit of price movement. If we look at organic corn, feed grade corn, for the 2-week period ending November 6th, our Macar's market price survey recorded the average price delivered to the U.S. Corn Belt for feed grade corn at $9.41 per bushel, which is up about 32 cents per bushel from the start of the previous month. And if we take a little bit longer perspective and look at prices since early September, on average, prices have actually been up about 45 cents per bushel for organic corn, or they've gained about 5%. And looking at soybeans, they've actually moved a little bit in the opposite direction. For that same 2-week period ending November 6th, the delivered price for organic soybeans to U.S. Corn Belt elevators averaged $31.70 per bushel, which is down about $1.10 from the start of October and down nearly $1.50 or about 4% from early September. And if we think about these price movements kind of in the context of harvest expectations and the import trends we've discussed, they make a little bit of sense. If we think about the organic soybean price, we're looking at what we expect to be a really fantastic harvest here in the U.S. And so with such a phenomenal harvest, it's not too surprising that we're seeing a little bit of downward pressure on prices, particularly if we think about the fact that, as you mentioned, we're losing some of this risk around the import outlook. We're talking about soybean prices that are still, well above $30 per bushel. We're not talking about discount soybeans at all yet, but we're not seeing those contracts nearly as frequently. They're coming in at $35 and $38 per bushel. We seem to be continuously getting closer and closer to selling around this $32 per bushel range. And corn, even though we're also seeing a really strong outlook for harvest, if you think about our general supply position, we started this marketing year, it was pretty tight, following some pretty substantial cuts to imports over last year. So with that tight supply position, again, I'm not really surprised that we're seeing a little bit of price support, maybe as the market's getting ready for, harvest to really be available. It's mostly done, so it's sitting in bins getting marketed. But again, I think with this price gains, it's hard to see this translate into anything too long term. A lot of this is potentially predicated on the fact that we did see a sharp reduction in imports last year. If we see this year organic corn imports, they remain really reduced again, and we see the market tighten further, sure, we could see this translate into additional price support. But, that's a lot of ifs to stack up there. If we see a little bit of recovery in the pace of imports compared to last year and overall supplies remain, similar, if not better than last year, which they're likely to be, particularly considering the fact I think we're looking for like a 9% boost in harvest this year, that's likely to probably start adding some downward pressure to price by the time we get into next year. And, really thinking about all these things long term, the weaker prices we're seeing on the soybeans, we're talking about what's likely to be a reduced import market for organic soybean meal, and that's going to keep the soy supply situation in the U.S. tight, likely to keep support on soybean prices in the U.S., even if we do start to see better imports and we have a great harvest. In general, so much of our market's reliant on those soybean meal imports. If we lose those organic soybean meal imports, that's going to tighten up the market enough to keep prices supported. Similarly, looking at organic corn, we're seeing some price support, but again, without a long-term outlook where imports really tighten up, I have a hard time thinking that that's going to translate into persistent price support, particularly, given the fact that we do have a good harvest. And, it's hard to say. We could have another significant global logistic issue that, we're still dealing with it now. And that's part of why imports were down last year. If it remains as significant this year, and we see those imports remain really reduced again, yeah, you could probably make an argument for stronger corn prices. But I tend to believe that, we'll see these things continue to improve as we move to this next year, and that allows some more imports to come in, and that's going to add lid to how high these corn prices can move.
And certainly, as we've talked before, the corn market just isn't as impacted by imports as the soybean market is. But, in the short term here, we are seeing prices moving in the opposite direction of what the overall general market might point us. But, some of that news, as you said, and as we heard from Rob in the first part of this podcast, is that we had a great harvest, and some of that might be a reaction to that. But all in all, I think this will be stuff we'll continue to watch moving forward. Ryan, thanks a lot for your time today, and we'll be back next month with another market update. Thanks for listening.
Thanks, Brian.